So today I thought I'd take a look at a stock that is down 53% since its all-time highs, and I've seen a lot of you guys mention it in the comment section. Is this a stock to buy as a turnaround play? And on the Discord as well, it's been quite a popular one on the Discord, and people mentioning, could this potentially be a turnaround play, also collecting a very high dividend yield, a historic high dividend yield on this stock. And today I thought I'd tell you my thoughts on this business. Now before we do get onto that, on the Patreon over the weekend we did drop an exclusive video which was a stock request. I did take a look into BYD, and it's around about 20 minutes, yeah, it says there, 20 minutes long. This is where members of the Discord vote for me to take a look at this stock. The winner was BYD, and I give my thoughts on that stock on the Patreon. So if you do want to see exclusive content from me, join through the link in the description. £5 a month. It's not too bad to get a Discord to talk to people about stocks, including me, and 2 exclusive videos a week. But getting on to this stock today that's been talked about is Pfizer. Pfizer is currently $27. It's a $153 billion market cap company. It's a American pharma company, and it is currently a 6% dividend yield. Now, if you do take a look at the stock price, it has been quite a little bit of a volatile one, as you can see here. But if we do go to the last 5 years, you can see here the stock was quite stagnant, and then you can see this big bounce up in the share price. And then since then, 23rd of December 2021, the stock has fallen down massively, 53% since that time frame, and is now around about $27, which is actually below where it was before the whole CEV situation, which is one of the reasons why the stock did go rallying there as a big supplier for the CEV situation, which we'll talk about in a little bit. Now, obviously the reason why people are looking at this is seeing the share price down and going, oh, the share price is down. Is this an opportunity to buy a great company, a great stock at great values on this dip, and I'm going to get the rewards for it? Now, we'll look at the reasons why it's down in a little bit, but what that has caused is a very high dividend yield, and I think that's what's the most attractive part for a lot of people. If you look at a dividend history for Pfizer, you can see here it's currently yielding 6.1%, and if you look at the last kind of few years, we previously had it around about 4%, but mostly it's stuck around about 3%. So this is historically double the yield that what it normally is. And that is what people are interested in, is that the share price has fallen so much, but as the dividend stays paid out the same amount, the yield has increased. But the big thing you're seeing, is this going to be a dividend trap? Now, this is what a few people get caught into. A lot of people look at the dividend yield and go, hey, look at that, I can get a historic high 6% dividend yield. I'm really happy to get a 6% dividend yield. And they don't realize that the reason why it's so high is because the share price has dropped, and eventually the share price is dropping because there's something wrong going in the financials, and them financials might lead to the company not performing on the share price point of view. It might lead to a point of view where the debt balance sheet gets ugly. Also, they might not have the profitability to pay out the dividend. So sometimes people see these high dividend yields and then not actually look underneath the bonnet, as so to speak, to see what is going on inside the business and if that is a sustainable dividend. So obviously, let's look at the negatives. Why is this drop happening in Pfizer at the moment? Well, the first thing, obviously, as we mentioned, is the CV situation. Major supply to the CV situation. Basically a situation where everyone basically had to have one, or there was a couple of choices of the products that were supplied to have the CV vaccination. That led to a big surge in the financials, and if you look at the financials, they did absolutely amazing during that time frame. You can see here historically the company had been pretty stagnant on revenue and profitability basis, and then we had the big surge up in profitability and revenue. That was the CV vaccine. Now obviously the CV situation has calmed down a lot, and that's led to not as many people having to get the CV vaccination, and that means there's a big pull out on revenue and profitability on the numbers. So they have some really hard comps going on at the moment, which has hurt them as well. Now also, when you look at the business, what also is hurting them is their current business model is getting disrupted through competition, which is hurting the profit margins and some of the revenue, and as well as that the company itself is having a lot of the patents on some of its products expire. So obviously they are now being able to be made by, or these are future ones that you can see that are expiring, and some of these total up to 21 or 22 billion in revenue that's going to be expiring. And you can see here that's a pretty good chunk. That's over 20% of their revenue at the moment. Well, to be fair, that's the old revenue. If you look now, that's nearly half the revenue is going to be expiring. Now, a few of these have been sorted out by new patents or products that are very similar, and that's now patent. So they are trying to work around some alternatives to this, but it is a big issue, and the competition is a big issue. And the crazy thing is, when I look at the management team, is why haven't they being able to look at this and go, they know that this is going to expire. So why isn't the management team adapted to this situation, which makes me a little bit nervous around the actual management team here with Pfizer. Now, clearly the management team have seen this, and rather than developing new products, it looks like what they're trying to do is go through the M&A route to try and offset this a little bit. Now, I've got to say, M&A can work out, but it also, if it doesn't work out, it can be a very expensive mistake, which makes me a little bit nervous. A little bit nervous that management knew this for a while. Why were they not able to develop anything new rather than going for these big acquisitions? I mean, a 43 billion is quite a big deal as well. So yeah, that makes me a little bit nervous around the management team, because this is a big thing of if Pfizer is going to be successful in the next few years. Now, if you look at the current future growth of the business, they are forecast to start moving back up in the right direction, and they are forecasting profitability to start moving back up in the right direction, which does need to happen, because if you do look at the dividend point of view right now, the dividend has historically been hiked up very nicely, but because of the big drop in profitability, it does mean, as an earnings basis at the moment, it means that the earnings are not covering the current dividend. I think the dividend comes to about 12 million-ish a year, and that means that as a dividend point of view, they are not making enough profitability to cover the dividend at the moment. So if you do look at the future growth, for example, 2 billion is nowhere near to cover the dividend. Neither is 7 billion actually by the end of the year. So it's going to take them a while to get up to the profitability to cover the dividend, which makes me nervous. And also think about, will Pfizer have to cut the dividend to be able to kind of have that safety net here? And like I said, with acquisitions and M&A as your growth strategy, what makes me nervous is then the business itself has had to take a lot more debt on to make the acquisition. This is why I look at management team and going, why weren't you able to develop these sort of new revenue income streams rather than have to go to the M&A market, especially when you make a big acquisition like that? And that has now put the balance sheet in a place where a year ago it was sitting around 37% debt to equity. It's now jumped all the way up to 80% debt to equity, which is not what you want to be in. And especially when you look at the balance sheet as well, they sit on 72 billion of debt, which is nearly half the market cap, to 12 billion of cash. So the balance sheet is definitely looking in a lot worse place than where it was at. So there's definitely a few issues at the moment. So for me, when I look at Pfizer and the stock, I mean, from a share price point of view, I don't think it's that badly valued, to be fair, when you look at the situation and the drop in profitability. The other thing as well is, like, from a dividend point of view, I don't actually think the dividend is that safe at the moment. I would like to see probably more improvement in, or shown improvement in the financials through this acquisition before buying, because at the moment it does definitely look like there's a lot of pressure on the dividend. And I can think of a lot more stocks out there that have a lot more safety net around the dividend. So yeah, for me, I think there's a lot of risk here with the business at the moment and turning it around. But I can see why people are looking at it, but I think there's a lot of ifs and buts still to be shown in the business, and I think there's a lot more safer places to be putting the money. The other thing as well is that Pfizer itself is actually in an industry that I don't like touching. And the reason for that is that I've always gone by a quote from Peter Lynch, which is buy what you know, and I've always stuck by that. I've always kind of bought things that I have knowledge in. I think if you're going to be a retail investor and you want to be ahead of Wall Street, you kind of got to buy things that you know and maybe sometimes use as well, and that's what gives you the kind of advantage. Now, if you're kind of in this pharma space, then yeah, you know, if you have inside information about, actually, I think they can turn it around because I've actually seen this and I see the products and I know these products are upcoming, then you might want to get in. You might have better knowledge to go and buy this opportunity. For me though, I don't have much knowledge in the pharma space, and as well as that, the things that can sometimes affect Pfizer is like approval of certain products, and I don't like that situation where approval can be something that they work on for many years and it gets denied and that product can get knocked back, you know, many years. That's something that I don't like and is out of Pfizer's control. And also, I don't have that much knowledge if a certain product is going to get that approval to be used. So that's, for me, I've actually never really bought a pharma company because of the risks of approval and how successful they can be. I've only ever bought one pharma company in my history of investing, which was GWPH. They basically only sold, I think it was one product or two products. So it was quite easy to see and understand that pharma business. And as well, they already had approval for that product, and it was more just expanding into newer regions. So that was like a very easy pharma company to get my head around, and that was the only one that I have ever invested in. with Pfizer, they have so many products and so many things going on and moving parts that this is just, for me personally, a little bit too much out of my comfort zone. And even without that included, I've got to say, like, when I look at the dividend, I definitely think there's a few concerns around that dividend warranted, and that's probably reflected in the share price. That would make me go, there's certain other dividend stocks that I probably prefer to be buying right now, but I can see why people are looking at it, because it's definitely historically a lot higher dividend yield than what it's normally been at. But for me, I just think there's too many unknowns, a lot of questions around the M&A, and also the management team not being able to redevelop as new income streams themselves in the last few years that you want to touch it. So yeah, that's my thoughts on Pfizer at the moment. It's definitely not one that I'm looking to buy anyway. So yeah, hope you enjoyed it, guys. See you in a bit.